Well, hi everyone. I'm Cindy Nellis, and we just want to welcome you to our webinar on Pennsylvania taxes for new businesses. I'm Cindy Nellis. I'm the director here at the Penn West Clarion Small Business Development Center, and we're happy that you have joined us for today. The Pennsylvania Small Business Development Center program, we are partnering with the Department of Revenue to present a four-part series offered monthly. Today's topic is Pennsylvania taxes for new businesses, and as you can see on the flyer, the other three topics are getting started with MyPath, sales tax basics, and withholding basics. And we do hope that you plan to join us for these other topics in the months ahead, if you haven't already. I do understand that we're coming to the end of the year, and we are planning to come out with another series in 2026, so stay tuned. But we do hope you plan to stick with us in November and December. So today's topic, I guess I jumped ahead a little bit. Today's topic, you will learn and understand the rules, laws, and procedures to follow as an entrepreneur and business owner. Most tax delinquencies often stem from misunderstanding Pennsylvania laws and procedures. So we will highlight some of the common errors, discuss income tax, sales and use tax, exemption certificates, and employer withholding tax. In addition, you will learn some guaranteed tips for success and your rights as a Pennsylvania taxpayer. I do want to remind you that we are recording, and we will be sending you the recording along with the presentation slides and our webinar flyer. You have been muted as a participant and your video has been disabled, but if you have a question for our presenters, I just ask that you use the Q&A. And if you have a question for me, your host, please enter that in the chat. Before we get started, though, I'd like to introduce you to the Small Business Development Center program. We are grant funded with a mission to help businesses start, grow, and succeed. We provide education, information, and tools to help you, our business owners, make better business decisions. We do this through our business consulting services primarily, but of course also through training events like today. Our consulting services are provided at no cost and confidential. And we offer our training seminars on a variety of topics that target the needs of small businesses. And to us, a small business is generally defined as a business with less than 500 employees. So there's lots of you out there. We also use our funding to provide access to database information and resources related to conducting industry and market research, as well as financial analysis, and of course, using all of those things for implementing marketing strategies. We do partner with many economic development organizations, and we do so to help connect you, our business owners, with even more resources as you get started and grow your business. A little bit about our network in Pennsylvania, because of course we're part of a national program. But in Pennsylvania, our network is made up of 15 centers, all located at institutions of higher education. Our national program is called America's SBDC. And so it does enable individuals like you all over the country to access our program services just right in their neighborhood. So this is how you can connect with me. This is our information for our website, and there is no wrong door. Feel free to get in touch with our center, and we'll make sure that we get you connected with the center that is in your neighborhood for one-on-one business consulting services. Of course, training is offered. A lot of it is offered online, so I encourage you to check out the pasbdc.org website and peruse the variety of topics. They are live, they are some in person, and then we actually have a portfolio of training events that are on demand. So feel free to check that out. Today, though, our speaker from the Department of Revenue is Stephanie Schreck. Stephanie has over 20 years of experience in customer service. She currently works as a research analyst in the core division of the Customer Experience Center. She started her career as a phone representative with the Customer Experience Center back in 2019. Through the years, Stephanie has served in many different roles within the Bureau, all of which have allowed her to work directly with the customers of the Department of Revenue. And she has a couple of colleagues with her, Jason and Allie, and they will be answering your questions via the Q&A while Stephanie presents. And we do have a hard stop today at 1 o'clock. We do plan to get through all of the information as well as answering all your questions, but I did want to make you all aware of that for today. All right, with that, Stephanie, I am going to stop sharing and you can share your presentation. And then you just have to unmute, Stephanie.
I knew I was going to forget something. Good afternoon, everyone, and thank you for joining us. Again, my name is Stephanie Schreck, and I am a member of the Customer Outreach Relations and Engagement Division here within the Customer Experience Center for the Department of Revenue. I'm honored to be here to be able to talk with everybody today about Pennsylvania taxes for new businesses. In our experience, we have found that most taxpayers work very hard to comply with Pennsylvania tax rules and regulations that pertain to their businesses, but we also know that tax law is not always the easiest thing to understand. So our goal here today is to walk you through some high-level information that you should know as a new business owner. We are also going to point out some common errors to avoid, which can ultimately save your business both time and money. So we will get started here. Let me just take care of that. All right. All right, so this is our agenda for today. As you can see, we are going to talk about a few different tax types, including income tax, trust fund taxes, and business use tax. In addition to that, we will talk about some exemption certificates, some tips for success, and then your rights as a taxpayer. All right, so let's get started with some income tax information. Businesses do have a annual income tax filing requirement, just like any taxpayer. The type of business structure that you have determines what form you will be using. So sole props report income and expenses using a Pennsylvania Schedule C with their PA 40 for each business. These are the folks that do not have an EIN for their business. So instead, their business is associated with their Social Security number. Is the owner of a single member LLC that receives net profit income reports its income and expenses also using the PA 40 Schedule C. The owner of a single member LLC that owns and operates a rental property will report its income and expenses using the PA 40 Schedule E form. Partnerships, both general and limited, are required to file a PA 20S PA 65 information return and provide each Pennsylvania resident partner with a PA Schedule RK1, and then each non-resident partner with a PA Schedule NRK1. Now, if the partnership is taxed as a partnership for federal tax purposes, these businesses will have an EIN. Okay. So in addition to income tax, you may also have what is called trust fund taxes. Trust fund taxes are collected by the business owner and then held in trust until they are paid to the Commonwealth. There are 5 taxes that represent trust fund money, but today we are only going to focus on a few that most likely pertain to your business. And these are withholding tax and sales tax. It is important to remember that these taxes must be reported timely and remitted in full to the Commonwealth. Again, you are simply holding these taxes in trust until you file and pay. Please keep in mind that these funds should never be used to cover business or personal expenses. We suggest that you keep these funds in a separate account until you are ready to remit them to the department. Okay. So here we do show all 5 taxes that do represent trust fund money. Some or all of these may pertain to your business. So first off, we do have withholding tax. This does usually occur when an employer withholds state income tax from an employee's pay and then remits the money to the state. Sales tax is levied on the sale of taxable tangible personal property and certain services. The next 3 taxes are mainly associated with vehicle leases and rentals, as well as the new tire fee, and they collectively fall under what are termed PTA taxes and fees. Now, PTA does stand for Public Transportation Assistance. The vehicle rental tax pertains to car rentals from businesses with an inventory of 5 or more vehicles for rent. And the tax on liquid fuels is just what it sounds like. This tax is endured by the consumer, although the distributor is liable for the collection and payment. Please note that trust fund taxes must be accounted for on an accrual basis of accounting. Accrual accounting looks to match revenues and expenses based on the business cycle of the firm rather than with the actual inflows and outflows of cash. Therefore, sales tax liabilities are recognized at the point of sale, not when the sale is actually received. All right, so let's look at some of these a little bit deeper. So first off is, what is withholding tax? As I mentioned, withholding tax is usually when an employer withholds Pennsylvania personal income tax from an employee's pay and then remits those funds to the state. In MyPath, which is our online customer service portal, you will see withholding tax broken down into 3 different types. The first withholding tax is listed as employer withholding. This applies to W-2 employees. There is also what's called other income withholding, and this is when for those non-wage withholdings that are usually reported on a 1099 miscellaneous or a 1099 NEC. Typically for small businesses, this would apply to independent contractors. If you need assistance with determining whether an individual is a W-2 employee or an independent contractor, you will want to determine things like, 1, is the worker being hired for a temporary project? Or 2, can they choose where and when the work is performed? 3, do they use their own materials for the work performed? And then finally, are they paid a flat rate or an hourly rate that is invoiced? So always as a rule of thumb, if you answered no to all of these questions, chances are the individual would be a W-2 employee. If you are still uncertain whether someone is a W-2 employee or an independent contractor, you can always complete the federal form SS8 and submit it to the IRS, and they will make the decision for you. All right, so just kind of looping back around here. I know I mentioned that there are 3 types of withholding. So the final withholding type that we do have is what's called a retirement withholding. And this is reported on a 1099-R and applies when withholding that is taken on retirement income. Now, in the state of Pennsylvania, withholding is taken at the time of the retirement contribution, not the distribution, provided certain qualifiers are met at the time of withdrawal by the employee. This is most likely not going to pertain to business owners, as most of the time retirement plans are administered by third parties. All right, so when do I withhold? So if your business is a sole prop, a partnership, an association, a corporation, a government body, or any other entity that employs 1 or more persons, it is required by under the Internal Revenue Code to withhold federal income tax from the wages paid to an employee. You are then required to withhold and remit Pennsylvania personal income tax from the compensation you pay to your employees. So the simple answer here is every time you issue a paycheck. Pennsylvania law requires employers to withhold Pennsylvania personal income tax from employees' compensations in two common cases. The first is when resident employees perform services within or outside of Pennsylvania, and when a non-resident employee performs services within Pennsylvania. Currently, our personal income tax rate is 3.07%, so that means you must withhold 3.07% for any employee who lives in Pennsylvania, regardless of where the work is being performed. You must withhold 3.07% for any employee who lives outside of Pennsylvania if the work will be performed in our state. All right, so when is it due? The current schedule for employees to withhold and remit employees' taxes on wage and salary income can vary. The frequency of remittance is based on the amount of withholding that is required. So the greater amount of withholding, the more frequent you are required to remit. The return should be filed every quarter for this tax, and there is also a W-2 reconciliation that must be filed at the end of the year. All right, now I'm sure everybody wants to know is how to file and pay. Again, the department has an online customer service portal called MyPath. MyPath, again, is online and is a system that allows our taxpayers to file returns, make payments electronically with no cost. So it's free. Simply visit mypath.pa.gov and sign up for a user profile. Now, the portal does have both logged in and non-logged in functions, but most business tax transactions do require you to have a profile. The department also has several Revenue 411 videos available that will provide step-by-step instructions regarding how to use our MyPath portal. So if you are new to our system, I would recommend for you to take a look at those resources before starting to set up a profile. All right. It is an important note is that under current regulation, that any payment of $1,000 or more must be remitted electronically. So I encourage you to set up a profile rather than sending a check to avoid any additional penalties that could be applied for payments of that amount. If you do have any other questions related to withholding tax and the requirements, we do have the REV 415 document available out on the revenue.pa.gov website. All right, now we have sales tax. So what is sales tax? Again, Pennsylvania sales tax is levied on the retail sale, consumption, rental, and use of tangible personal property. This could be including digital products and certain services here in Pennsylvania. Currently, Pennsylvania does have a sales tax rate of 6%. However, by law, we do have an additional 1% local tax that is added to purchases in Allegheny County and a 2% local tax added to purchases made in Philadelphia. Excuse me. There are some major items exempt from sales tax, which can include food that is not ready to eat, candy and gum, most clothing items, textbooks, computer services, pharmaceutical drugs, sales for resale, and some residential heating fuels such as oil, electricity, gas, coal, and firewood. Generally, services to the human body, such as haircuts or massages, are usually also exempt from sales tax. Additionally, permanent landscaping services, such as grass cutting, are also generally exempt as well. So when do I collect it? Sales tax must be collected at the time of sale unless the sale is on credit. Taxes due on credit sales must be remitted within 30 days of the date of the sale. A seller is liable for reporting and remitting the taxes. and fees with the tax return covering the period in which either a taxable sale was made or the tax or fee should have been collected. For anyone that is familiar with accounting terms, as I said this earlier, but this is an accrual basis accounting. It is the most commonly used accounting method where the business reports the income when earned and expenses when incurred, as opposed to cash basis accounting, which reports the income when received and expenses when paid. All right. So I'm sure many of you have additional questions about sales and services that are taxable. That is not something that we are going to cover in detail during this module. We do have a sales tax basics presentation that will be running in the future. We also have a retailer's information guide known as the REV 717 that does have a more detailed list of some taxability items and services. All right, so when is sales tax due? Unlike withholding, sales tax filing frequency may vary. When you are a new sales tax filer, you are set up on a quarterly filer, meaning that your returns are due in April, July, October, and January. But your filing frequency can change. Every year, the department reviews each business that files a return and determines whether or not the filing frequency should be changed. If such a change is made by the department, the business will be notified in writing. So it is very important that you pay attention to the notices because you don't want to be in a position that you were a quarterly filer that has now been changed to a monthly filer and you threw your notice out. So again, this is another very important reason to have a MyPath profile because you can receive this notification through there as well. So how do I file and pay? So just like withholding tax, again, we encourage everyone to use MyPath. You do need to have a user profile. So again, it's very important to get one set up right at the start of before your business so that way you have everything ready to go. To make sure that your business is registered properly, you will need to use the online business tax registration hyperlink on MyPath homepage to be able to start the process of obtaining a license, and then you'd be able to create a profile. Now, the department also has some third-party vendors who will provide e-filing software for some taxpayers who do not wish to use our MyPath system. We do have a list of these software vendors available on the department's website. Again, it's important to note that any payment of $1,000 or more must be remitted electronically to avoid any additional penalties that could be applied. All right, so use tax. Use tax is by no means unique to Pennsylvania. Every state that has a sales tax also has a use tax. The purpose of use tax is so that Pennsylvania businesses are not put at a disadvantage to businesses who do not charge sales tax. Sales tax is imposed on taxable goods and services at the time of the sale and collected by the seller. So in instance where the seller does not charge sales tax on a taxable item, the purchaser is then responsible for remitting the tax on their first use. This is use tax. Use tax exposure occurs most often when a business buys taxable goods over the internet, and the seller, again, does not charge Pennsylvania sales tax. So again, in these cases, the purchaser must pay their use tax obligation in the month following the month of receipt in Pennsylvania. This is also true for purchases a business makes while out of state, where no sales tax is charged. The item becomes taxable upon delivery into Pennsylvania. The department's audit experience shows that most businesses owe use tax, but many do not pay use tax. It is estimated that upon audit, 80 to 90% of all businesses are found to owe use tax. Also, please be aware that use tax does apply to individual consumers as well. So it's not just a business tax. So how do I file and pay? Any business that incurs use tax liability on a regular basis is encouraged to register for a sales and use tax account via MyPass. If you are already registered for sales tax, then you can file any use tax due along with your sales tax return. If the sales tax return is filed timely, then the use tax is considered timely no matter what filing frequency your business is on. If you are not required to be registered for sales tax and you have a use tax liability that needs to be paid here to Pennsylvania, you may still file the use tax return and pay electronically on MyPass directly from the home page. All right, so while the sound of filing and remitting use tax might seem unsettling, please remember that our education and enforcement of this tax may help level the playing field for our business, for your business. So without our effort, Pennsylvania businesses operate at a 6% disadvantage to online and out-of-state businesses. So here's an example. So taxpayer A opens a kitchen supply business. As part of their business, they need furnishings for their business office. So they pursue two different quotes to get the best deal. In the first instance, they get a quote from an out-of-state seller who can ship the goods into Pennsylvania via third-party freight. The out-of-state seller is not required to charge sales tax. Now, here in the second instance, the taxpayer gets a quote from a Pennsylvania business that, of course, by law, must include sales tax. So on the first glance, it might look like the better deal is with the out-of-state seller, and many taxpayers would think that and make the purchase, resulting in a loss of sale from the Pennsylvania business and lost tax revenue to Pennsylvania. However, applying the use tax, the out-of-state seller purchase price actually becomes $10,706. So when the tax was collected, it is actually the Pennsylvania business who does have the better deal. This is the purpose of use tax, to keep Pennsylvania sellers from being undercut by the out-of-state sellers. Sales and use tax would not apply to products purchased if you are selling to a customer intact. All right. So now let's discuss the Pennsylvania exemption certificate. This is also known as an REV 1220. So this exemption certificate is used by a purchaser and seller to document any reason for a sale of tangible property or services where tax was not collected. If properly completed and when accepted in good faith, the REV 1220 will relieve the seller from the collection of tax. Exemption certificates are required to substantiate all exempt sales with the exemption of the following: sales to governmental entities, sales of non-taxable tangible personal property or services, and sales delivery is required to be made outside of the Commonwealth. There are a couple of important reminders regarding this exemption certificate. And the first is that it is not a generic business exemption. Many businesses think that because they are a business, they are tax exempt. So when completing the form, the reason for why the property or service is exempt must be filled out, and it must be signed and dated by the purchaser or leasee in order to be valid. Sellers should be aware that a hard copy exemption certificate must be kept on file by the seller and should show both front and back pages. Documentary evidence must also be retained by the seller on these transactions. So we suggest that you staple a copy of the receipt to the exemption form. Also, please note that upon audit, you can be assessed for sales tax not collected based on an invalid exemption certificate. So let's discuss some tips for success, some resources that the department has to offer, and then the rights of both taxpayers and the Department of Revenue. All right, so the first tip for success is to maintain adequate records. A question that all new businesses have is, how long do I need to keep my business and tax records? There is no clear answer to that question, since each business differs, but I'll provide you some general guidance. Most of the time, the answer is going to be 4 years, which means the current year plus the previous 3. For payroll, you'll want to keep a complete payroll record showing the proper withholding and remittance of personal income tax and wages for at least 4 years. Mortgage, capital assets, and investment records, you'll want to maintain those documents throughout the life of the obligation, as they will be used for depreciation and cost recovery calculations. Purchases made during a tax year, you'll want to keep records that will help to document the current assets, inventory, and claim expenses against income. Again, the rule of thumb is kept for 4 years. You'll also need to keep record of any sales paid by you at the time of purchase or dues tax paid by you as well. If you operate in multiple states, you will need to keep a detailed record of Pennsylvania sales, as well as a detailed record for every other state you do business. You'll want to keep a file of all exemption certificates and write the transaction number at the top to make it easy to find the case, to make it easy to find in case of an audit. Additionally, as we mentioned, it is a good idea to staple the sales receipt. If you do this, you should actually have that transaction and all the information you need ready to go. While we cannot recommend any specific products for use for record management, we will let you know that there are various software products available that can help you keep your books and records in proper order. Again, another thing is if you have a smartphone, you can, we recommend that you download a free scanner app. This will allow you to use your camera to save PDF copies of receipts, especially when you are traveling. Keep your address up to date. We're going to talk about address updates, and we know that there are some of you who are going to think, gosh, who cares? But this might seem minor, but it is often overlooked, and it's very important because it helps us communicate efficiently with you. So many taxpayers get behind on tax obligations simply because they are not receiving the correspondence from the department. And most of the time, it's because the items were being sent to an old or wrong address. As I've mentioned previously about sales tax, every November, the Department of Revenue reviews the amount of sales that an entity has, and we could determine that your filing frequency needs to be increased and bump you to a monthly filer instead of quarterly. This is because you've had an increase in volume. So in this case, if your address is not up to date, you might not have known that your filing frequency has been changed, and you could file as your quarterly due date, and now you're considered to be delinquent. So delays in correspondence about overdue tax liabilities extends the time it takes to resolve them. This can cause additional charges such as penalties, interest, possibly even collection agency fees to occur. So another really nice thing about our MyPath customer portal, it is fantastic. It's a great way for you to be able to keep this information up to date. We simply have a panel available out there that does say names and addresses after you've created your profile, to where you can keep this information current. File and pay on time. For income taxes, this is generally once a year event for you. and possibly for the business. But we can tell you, we can't tell you the number of times that we've heard somebody say, I forgot they were due. Failure to file and pay income tax or estimated tax payments due can result in penalties and interest charges. Another really nice feature that MyPath does have available is that you can send due date reminders. So this was a great way to help you keep on track of your different filing and payment deadlines. Again, trust fund taxes due dates can vary depending on the amount that you are regularly collecting. So definitely setting up the due date reminders can help you help you stay on top of that. All right. We do have information on our website pertaining to both withholding and sales tax obligations. Again, the department applies penalties for any late filing as well as any late payment. So that is, again, another reason why it's important to always file and pay on time. Separate bank accounts for trust fund taxes. So we do recommend that you keep a separate bank account to hold the trust fund money and to pay the tax due. If you do not keep them separate, you could easily end up spending trust fund money and not realize it. In general, it can increase the chances of misusing the tax money. As mentioned earlier, you cannot use trust fund money for business or personal expenses. It is very important to know that using trust fund money for anything as such can be considered a criminal offense. Take advantage of our electronic services. This is the fastest and most efficient way to get things done. Everyone back in 2020, when everything was shut down due to COVID, there was nobody in the office to manually process items. So in cases like that, using electronic services ensures everything keeps moving, even when you have to remove people from the process. So again, this is why we highly encourage all of our customers to create a profile out on the MyPath customer portal, because it's just a fantastic feature that we have been able to create to help our customers. Again, schedule due dates. You can view and print any notices that we have provided. You can get electronic copies of statement of accounts immediately. You don't have to wait for them to be received in the mail. You can make payments. Again, please keep in mind any payment of $1,000 or more must be made electronically based on regulation. If these payments are not made electronically, you could receive what's called an EFT penalty applied to your account. So again, keep that in mind when you are making payments. And then the final tip is to safeguard your data. As a business owner, it is important to protect your data and confidential information at all times. So we do have some tips to help ensure, to help you keep your systems secure. Install anti-malware, antivirus software on all devices. This can be laptops, desktops, routers, tablets, phones, and automatically update the software. Using strong passwords, okay? Using a different password for each account. Password protect wireless devices as well. Encrypt all sensitive files or emails. Backup sensitive data to a safe and secure external source, not connected full-time to a network. Make a final review of return information, especially direct deposit information prior to completing the payment or filing to ensure everything's correct. Wipe clean or destroy old computer hard drives or printers that could possibly contain sensitive data. Limit access to taxpayer or employee data. Check the IRS e-service account weekly for a number of returns filed with an EIN. If you or somebody affiliated with your business feels like they are a victim of fraud, please contact our fraud detection and analysis unit here within the department. They would be able to provide assistance in any of those situations. All right, some resources. All right. So one of the best resources that we have is the Department of Revenue's website. By coming out to our website, you can quickly obtain any information that you might be looking for. Here on the slide, I am showing you that simply all you would need to do is just select the topic in the middle of the page, what type of customer that you are, and it will dive down into the different sections that are needed. Our website is also compatible with all devices. So here I am showing an example of what it would look like on a cell phone. Okay, so meaning that you can access our website 24 hours a day, 7 days a week. All right. Sometimes customers, when they are visiting our website, they might have a specific question. Okay, we do have what's called our online customer service center. You can enter that by simply selecting the customer service link located on the right-hand side of the screen. And this is going to take you to our online customer service portal. In here is where we house over thousands of frequently asked questions that you could possibly receive an answer to what you're looking for. Now, there are times that you might not find an answer to your question. You can submit your question directly to our department, okay, by selecting the Submit a Question button here. Now, you are required to create a profile to submit a question through the online customer service portal. Please be advised that this is a separate account from the MyPath profile. All right. And then you would just simply select a category. We have over 30 categories that you can select from to submit your question to. Once you've selected your category, again, you would just simply type your question and it would be submitted to us here in the department. And once your question is submitted, you'll also receive a confirmation. Usually you will receive a response back within 72 business hours, but you could also receive a response sooner than that. All right. Besides the website, we do have the Customer Experience Center. We have multiple ways that you can contact us. Here on the screen we do have some of our phone numbers. That's where you can contact us directly. We do have a full and complete list of all of our district offices that you can also contact to receive assistance. I highly recommend that you call the district office prior to arriving to make sure that you don't need to set up an appointment. Your rights as a taxpayer. All right, so we have recently revamped our Taxpayer Bill of Rights. Pennsylvania has this Taxpayer Bill of Rights that ensures equality and fairness in tax administration and enforcement. The Taxpayers Bill of Rights sets a uniform procedure so that Pennsylvania Department of Revenue treats all taxpayers equally and fairly. As a taxpayer, you have access to the following guarantees: the right to quality service, the right to be informed, the right to confidentiality, the right to retain representation, and finally, the right to challenge the department's position and to be heard. All right. Per your right to challenge the department's decision and be heard, we're referring to is that you can file a petition with our Board of Appeals. It is important to know that there are appeal timeframes which need to be followed when petitioning to the board. The general timeframes to file an appeal is 60 to 90 days from the mail date of the assessment notice, depending on tax type. If a taxpayer is not satisfied with the decision received by the Board of Appeals, they can also file an appeal with the Board of Finance and Revenue. The general time frame to file an appeal with the Board of Finance and Revenue is about 60 days from the mail date of the decision from the Board of Appeals. To appeal that decision, a taxpayer may file with the Commonwealth Courts of Pennsylvania within 30 days of a mail date of a decision from the Board of Finance and Revenue. For specific appeal timeframes and details, please refer to the REV 460 and the REV 1799A. Excuse me. We discussed the rights of taxpayers and the representatives, so let's just quickly go over some of the department's rights. So we did earlier talk about record keeping, and this ties into the department's right to audit. Please keep in mind that we do not perform audits just to find out what businesses are doing. It is more of a standard business practice to ensure that everyone knows how to do things the right way so that all businesses are treated equally. Anytime an audit is conducted, the department will provide the taxpayer with a complete explanation of the audit findings for the taxpayer and their rights during the process. Again, if you do get an audit notice, please do not be alarmed. It does not mean that you've done anything wrong. Again, audits are standard business practices of the Commonwealth. Also, keep in mind that we have this session today so that you do not land here. We want to let you know this department does have these options, but we are trying to help you to avoid any enforcement if you do not file a return, pay tax due, or file a timely appeal for a tax balance. The department does have the option to use the tools we do have listed here on this side. Excuse me. The left side of the slide shows some more of the common enforcement tools used, to where the right side includes tools we use when we are receiving little cooperation from taxpayers. So again, our goal here today is to help you to avoid the scenarios where these tools would be used. All right. Now you might be wondering why we have a second slide on enforcement. Again, trust fund taxes are treated a little bit differently. Failure to timely collect and report sales tax money can lead to civil penalties, excuse me, equal to 50% of the unpaid tax and criminal penalties for theft, embezzlement, or misappropriation of government funds. This is addition to the standard penalty and interest. This is an example where the cost of non-compliance is higher than the cost of compliance. All right, so previously we've talked about protecting yourself so that you don't become a victim of fraud. This slide is telling you what to do if you do suspect someone is reporting fraud. Tax evasion is a crime, and that hurts all Pennsylvanians because the taxpayer did not pay their fair share. It decreases the revenue available to fund essential state programs and services. If you would happen to suspect tax fraud, report the activity directly to the Department of Revenue, including as much detail as possible. You can use the contact information listed on the slide, or you can, go out to our website and search fraud in the search box and report suspected tax fraud activity. All right. So after listening to the presentation today and you find yourself thinking you might have a tax requirement that you were unaware of, the department does have a voluntary disclosure program. This program was created for individuals and businesses that have not met their tax obligations because they were not aware of them. The department liaison officer will work to ensure that all the taxpayer filing and payment requirements have been fulfilled. There are incentives for coming forward. in return for their voluntary disclosure, filing their returns, clearing their tax debts. Taxpayers are only responsible for the payment of tax and interest. Any penalties of all taxes administered by the department could be waived when the requirements of the voluntary disclosure agreement have been completed. It is important to note that the program is only available for those taxpayers who are not registered with the department and for no investigation or collection actions have begun. Excuse me. Sorry. And of course, we do want you to know that we do have several social media platforms. We do generally use these outlets as a mean to push information to taxpayers as well. We will post tax law changes, some fast facts, events, or anything new that could be possibly going on with Pennsylvania taxes or the Pennsylvania Department of Revenue. Right? Here we're just quickly showing some available resources. We do have the REV 588 form, the REV 717, and then the REV 415. These are very important documents for any new business. They do provide a lot of very good information for getting started here in Pennsylvania. These documents are all available at any time directly on the department's website. All right, so this does conclude our presentation for the day. Again, thank you very much for joining us today, and I hope you guys have a wonderful day.
Thanks, Stephanie. I appreciate it. I know that there is a question, and so I am going to launch a quick one question poll and just ask that everyone take a quick second to answer the poll. That would be helpful. And then again, a reminder, we will be sending the presentation slides and the recording for today, probably later today. And if not, it'll be tomorrow. So I do appreciate everyone who came today. We will be back next week, and it will be on sales tax basics, and that'll be on November 12th. And then we round out the year on December 10th with the topic of withholding basics. So with that, I do think we have all of our questions answered. And so I am going to go ahead and finish today and just say thank you to everybody who came. We appreciate it. We look forward to having you join us next month. Thank you to the team from the Department of Revenue, and thanks to Stephanie for presenting. So thanks, everybody. Appreciate it. You all have a great day. Take care.